Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, 9th of October, 2021. And it's the weekly technical analysis for spot gold and dollar yen for the second week of October. Let's begin first with the spot gold. And you can see that it has been consolidating in a fairly tight range for most of the week, with support coming from the weekly pivot just near the 1750 level, and resistance right at the monthly pivot. That's near the 1771 level. And oscillating around the 62 pip retracement level around the 1762. And for the week, it has closed as a spinning top. Unfortunately, that's why it's been consolidating. So it did try to climb up above the 62 pip retracement, but then fell back again. On the Friday, after poor, slightly lower than expected jobs data from the US, initially it did climb up to hit the resistance at the daily 55 EMA and spiked through the 55th retracement. But then after that, it fell back lower again, back below the 62th retracement level. Back close to 1756, 1757 area. So let's take a look at the 4-hour time frame to see what happened here after consolidating, testing the support at the weekly pivot 3 times, and testing the monthly pivot resistance a couple of times. Friday was the spike up after the non-farm payroll data, and after hitting the daily 55 EMA, retreated, fell back to right to the 4-hour 55 EMA. So basically right back to where it started from the last couple of days. So it was unable to break out higher. So came back to almost towards the lower 1/3 of this range between the weekly and the monthly pivots. So we'll see next week whether it's still going to consolidate in this range, or it's going to try to break out higher or break down lower. But the likelihood is just consolidation. There's not too much major news next week. There's CPI, PPI, and retail sales figures, but nothing major. Key one will come at the beginning of November with the FOMC meeting, of course, where the Fed will take into account all the jobs data, and likelihood they'll start tapering in November, even though the jobs was slightly lower than expected, but it's still fairly reasonable as the unemployment rate has dipped down. Even though jobs added was only 194 K versus expectation of 490K. The ADP figures on Wednesday was good for the private sector. It was much better than expected. So it could be seen as a supply problem with not enough labor available, and participation rate has dipped slightly, so more of a supply issue than a demand issue. So that should be taken into consideration by the Fed as well. All right, let's take a look at the US dollar index. It started off the week very weak. We have a gap down at the start of the week, but managed to find support at the swing high that it broke up from. That's the 100 pip, and bounced back up to try to test the highs of the previous week, but was unable to do so, and fell back into round figure of 94.00. So that's a intermediate support level. That's the 94. So it looks like it's likely also going to consolidate for next week in a triangle. So it needs to pick up higher to test this previous swing high. If it breaks down, then this is a critical support level. So likelihood is more consolidation for next week. And just to see where this previous swing high was, it was actually a swing low from early part of last year. So that's blocking that move higher. All right, let's move back to spot gold. So unfortunately, it's also likely going to be consolidation. Let's move on to dollar yen, and you can see a strong move up throughout the week. Also started with a gap down at the beginning of the week, but managed to climb back up and break above the upper bullish channel trend line on Tuesday, and then from the Thursday closed higher again and followed through on the Friday, right through the resistance zone at the 112 and as well past the 138 fib extension. So we'll see if this turns into support and holds. Let's also move this also to the 138 fib. That could be near the upper channel trend line as a intermediate support. So we'll see if there's any continuation move higher. It's could be a move to the 112.50 area midway, 40 to 50 area midway to the next fib extension. Sorry, excuse me, this was past the 162 fib extension. If we take the fib from this swing high, That target there is at 138 fib, 112.78 versus if we use this 200 fib extension is at 112.88. So we'll leave it this for now, as it did hit the 162 here the previous week before falling back to test this swing high here, which now aligns with the monthly pivot at the 110.87 level. So we'll use this for now. Let's pull back to test that and climb back up higher. We can also take a short-term fib reversal to see whether it aligns. Yes, it aligns with the 162 fib reversal move with this 200 fib extension. So this could be a viable target over the next week, and the first target was likely going to be the 138 fib extension at the 112.56 for trying to target the 112.80 to 85 zone. So for now, let's identify a support zone here. So one here at the 62 fib retracement of this move here. So the 112 and this swing high is it's going to be a key support zone. And let's target this as the medium-term target here. There is also an intermediate target at the 138 fib. All right, let's take a look at the weekly time frame. And that's definitely a very strong bullish move past the close past the channel trend line. Okay, so this is going to be a critical week coming up for the dollar yen. And we'll see whether any of these news will trigger any further bullish moves, or whether it's also likely to consolidate as with the US dollar index. Because after a very bullish move, there could be a consolidation. So we'll see whether these levels here will provide critical support. The main one would be here at the 111.60, confluence with the 62 fib and the upper channel trend line. All right. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.